Hello, everyone. Thank you for tuning in. We're going to take a look at SPY here. Now, SPY is the ETF that tracks the S&P 500. The S&P 500 is the most important of all the benchmarks or indices or what have you on Wall Street. When I say a benchmark, it means because in the institutional trading world, which is where I spent half of my life, 2.5 decades, you need something to judge people against. Like, are they doing a good job or are they doing a bad job? Well, the way to answer that is, are they ahead of the benchmark? Or are they below the benchmark? In other words, if the S&P 500 is up 10% and they're up 8%, they're doing a bad job. If they're up 12%, they're doing a good job. But anyway, let's just take a look at this S&P. There's what I believe is that in every chart, there's a lesson to be taught. And a lot of people ask me like what the secret is, what do the institutional people know? And the answer is there isn't one. The secret is there is no secret. In the retail community, there's this thought that like there are the big guys versus the little guys. The big guys are always right. The little guys are always wrong. Well, let me tell you something. I've known many of hedge funds, or have known of many hedge funds. The performance sucks. The people that run it were in the right place at the right time. They walk away with millions of dollars. There is no secret formula. All right, it is what it is, and hopefully you'll subscribe to stockmarketjobber.com and you'll learn how things really work. And I don't have a secret formula or thing that's going to work all the time, but what I can tell you is this: if you pay attention to the right things, right, which is what we're going to talk about now, what's the price levels that are important? What's the momentum? What's the psychology? This is where good traders make money. All right. So, all that being said, I was hoping to save that for the end of this little talk, but let's just go into SPY right here. Now, there's resistance around 420. Not surprising. There was resistance there about a week ago. You can see this, maybe 2 weeks ago. What is resistance? Well, when a market is moving higher, there's not enough supply or sellers or sell orders to fill all of the demand or buyers or buy orders. So the buyers are forced to pay higher prices. When we get up to a resistance level, well, for whatever reason, and most of the time we don't know why, but when we get to a resistance level, for whatever reason, the sellers come out in force and the buyers can buy all they want. The sellers can whatever sell. The buyers don't need to worry about paying higher prices. And a lot of times the tide turns and we reverse. Now, why does this happen? Well, all market moves are based, well, maybe not all, but 98% of them are based on market psychology. And if you're an investor and you're looking to sell around, say, 420, you're watching it go higher and higher and higher. It goes from 410 to 420, and maybe you start thinking, oh, this thing is going higher. I'm going to go to 421. I'm going to sell at 422. But then you notice, oh, we stalled out around 420. What's going on here? Well, what that tells us that there are other sellers coming into the market. The supply and demand equation is changing. Now all of a sudden the buyers can buy all they want. There's more than enough supply to fill all the demand. Now some of these sellers or investors who want to sell around 420 start to get kind of freaked out. They start to think, oh, gee, there are these other sellers coming into the market. I might have to get more aggressive. I might have to reduce the price that I'm willing to sell at because the buyers are just going to go to whoever is willing to sell at the lowest price. If I'm trying to sell at 420 and there's someone else who's trying to sell at 419, they're just going to go to them. So what happens? We get sellers undercutting each other and we get this snowball effect. And we can see it here. We get to resistance, we sell off. We get to resistance, we sell off. Resistance, sell off. Resistance, sell off. The best traders go to work every day agnostically. They let the market tell them what to do. If you go in with a set opinion, you're probably going to lose. All right, you need to be flexible and you need to be nimble. Not easy to do, but if you can, that's where the profits come from. Anyway, we got these impatient sellers undercutting each other. Now, let's think of the opposite. The market's going lower. Well, in this case, there's not enough demand or buy orders to absorb all of this selling or supply. So the sellers are forced to offer their shares out at a discount, and this forces a downtrend. When we get to support, it's the opposite of resistance. All of a sudden, for whatever reason, there's enough demand or buying or buy interest or buy orders or however you want to define it to take in all of the shares for sale. People that want to buy that have been watching the market go lower start to say, there might be other buyers around. That's why the market's not going any lower. So they start to worry. Oh, gee, if I'm not willing to pay the highest price in the market, the sellers are going to go to someone else. So people want to buy around, say, 405. Well, I'm going to pay 406. Next person says, oh, that guy's going to pay 406. I'm going to pay 407. And we get a snowball effect to the upside. All right. So support and demand, supply and resistance, the best traders know where the important price levels are. Now let's just check this out. Why would a resistance level here become resistance again over here? It's what we call market memory. Well, has to do with psychology. There were people who bought up here who tell themselves, man, I made a mistake when the price gets lower, and they tell themselves they want to get out, but they don't want to lose any money. So if the price gets back up to where they bought, they're going to sell. They're going to get out of break even. So we have remorseful buyers who bought here placing sell orders over here. And if there's enough of these remorseful buyers, the level that was resistance can remain resistance. This is why there's resistance at former peaks. It's psychology. Here's another thing we see with buyer's remorse. Not only can a resistance level remain a resistance level for some time, a support level can become resistance. There are investors who bought here who regret doing so when the price goes lower. They tell themselves, I made a mistake. I am going to get out at break even if I can. If you have enough remorseful buyers who bought here, placing sell orders here, the level that was support can turn into resistance. All right. So now let's just go back up to where we are currently. We had this huge move up on Friday. We're overbought. We're at resistance. There are people who bought here, probably trying to get out because they're afraid the market went lower. Overbought means something is trading at an extreme above its typical or normal or what would be historical trading range. This draws sellers into the market because they're expecting a reversion. We're at a resistance level. There's a lot of sellers at resistance levels. There's a lot of investors who want to sell or want to sell. So we got this double whammy. At resistance, overbought. Good chance we could go lower. This red line is a Bollinger Band, right? It's 2 standard deviations above the 20-day moving average. Statistics tell us, or at least they tell me, because I'm not a statistician by any means, right? Nor do I pretend to be. But 95% of trading should be within 2 standard deviations of the mean. So the fact that we're at resistance, we've exceeded this threshold, that's going to draw sellers into the market. It's a good chance we stall out here. Maybe we go a little bit lower. I'm not saying the market's going to crash, but I think we get a little bit of profit taken. So I could be wrong. I could be right. I just let the market tell me what to do because the market is never wrong. So check back in and we will see what the market is saying, and I will talk to you then. Thanks, everyone.